To perform journal entries correctly, you have to know your normal balances and the expanded accounting equation. So what is exactly normal? Well, it's how you increase an account. Now, you're going to do that with a debit or a credit. Well, it depends on the account that you're using. Some accounts increase with a debit and decrease with a credit. Other accounts increase with a credit and decrease with a debit, which is why you have to know what your normal balances are in order to do the journal entries correctly. And what are they? Well, for an asset, an increase is a debit. For a liability, it's just the opposite. On the other side of the equal sign, it's a credit to increase a liability. And in general, for equity, to increase it is credit. But then you have to look at the four components of equity. Withdrawal will decrease equity. So to increase a withdrawal, it's a debit because equity decreases with a debit and increases with a credit. So of the four components, the two that increase equity will be a normal balance credit. The two that decrease equity will be a normal balance of a debit. So it's probably best to write these down and keep it in a note card until you really memorize them and understand them. Now we use a T account to represent what's happening in the ledger. But just keep in mind, debit and credit is location only. Debit is left, credit is right. That's it. Location only. Assets increase with a debit. Liabilities increase with a credit. Investments, owner's contributions, increase with a credit. Owner's withdrawals increase with a debit. Revenue increases with a credit. Expenses increase with a debit. So now what about journal entries? Well, there's going to be some steps. First, you have to determine the account that's going to be affected. And this is when you're analyzing the source documents. Then once you determine the account, determine what category that account is in. Is it an asset, a liability, or a component of equity? Determine if it's going up or down based on the transaction, what's happening, and then you can determine if it's a debit or a credit. Now, these are the four steps you're going to take, but after a while, this will just be second nature. So let's look at an example. On February 23rd, Jay Corbin invested $20,000 cash and a building worth $150,000 to her new business, Jay Corbin Enterprises. The building has a $70,000 mortgage, which was also transferred to the business. So you can contribute assets and liabilities when you form a business. So first step, determine the accounts. It's going to be cash, it's going to be a building, it's going to be a note payable for that mortgage, and it's going to be owner's capital. Okay, that was step one. Step two, determine the category. Cash is an asset, building is an asset, note payable is a liability, and owner's capital, owner's investment, which goes into equity. Is it going up or down? Well, cash is coming in, building is coming in, note payable is coming in, and owner's capital is going to go up. Everything in this transaction goes up. So how do I journalize it? These were your first three steps. Well, cash, it's going up, so we're going to debit it. Building, we debit it. Notes payable, normal balance is a credit. We're going to increase it with a credit. Owner's capital is going up, so we're going to increase that with a credit. So let's look at how we would journalize this. Record the date. Record the debits. Records the credits, and those should be tabbed in, indented in. And record an explanation. So write down these four steps, and again, before you know it, this will be second nature, and you won't have to refer to your notes. But this is a balanced debits equal credit journal entry. Now on March 10, the owner, Jay Corbin, paid the utility bill for $125. So first determine the accounts. You paid it, cash, and it's utility expense. It's the utility bill. What is the category? It's an asset and it's an expense. Is it going up or down? Well, this time cash is going down because you're paying a bill, but the expense is going up. So how do we do this? Debit or credit? Well, cash is going down. That's your debit. And or credit. So expense is going up, so that's going to be a debit. Now, the normal balance, if you see on top, an asset is a debit, but it's going down, so we're going to do the opposite. We're going to credit it. Recording the 4 steps, the date, the debit, the credit. Cash this time is going out. It's going down, so you credit it. You debit cash when it comes in. And always remember to do the explanation. It's very important for tracking later. March 17, J. Corbin Enterprises completed 500 consulting services for the client M. Peterson. Determine the accounts. Determine the category. Is it going up or down? Well, accounts receivable is going up because they have not paid you yet. This is when you record the bill. But you've done the work so you can record the revenue, and revenue is going up. Okay, so what do I debit and what do I credit? Well, the asset, accounts receivable, is going up with a debit, and the revenue is going up with a credit. And here is your journal entry. The date, the debit, the credit, and the explanation. The 4 steps: determine the account, determine the category, determine if it's going up or down, and then you can decide what do I debit and what do I credit.